Welcome to the Think Small podcast, hypergrowth for small businesses. So, what's slowing you down?
Hi again, everybody. This is Rob Godlewski with the Think Small podcast. And today our guest is Michael Hoffman. Michael is the Chief Operating Officer with Adeptus Advisors Group, based out of New Jersey, but with offices across the country. Michael, thanks so much for joining us today on the Think Small podcast.
Oh, Rob, thanks for having me. I appreciate it.
Absolutely. Well, listen, Michael, tell me a little bit about the business and the problems you're solving for your clients and customers.
Yes. So Adeptus Advisors Group, we are a public accounting firm, an advisory firm with three main areas of focus. We have our tax area, we have an audit and test area, and then we have a business management area. And among those also, we do CAS work, advisory service work as well. We are located throughout the country. We have offices in New Jersey, New York City, White Plains, Long Island, Maryland, between DC and Baltimore, and we have three offices out in California. When you're in the business management area dealing with entertainment, you kind of need to be on both the East Coast and the West Coast. So,
for sure.
So we're there, and like I said, we provide traditional services, and we try and do it in an untraditional kind of way.
Ooh, tell me more about that.
When you're dealing with a client, there's your general tax compliance and there's things like that. We always try and take it one step further. And I always say we try and make the relationship whatever the client wants it to be. I mean, there are some clients who, quite honestly, they just want a tax return done. They don't want to talk. They don't want to hear planning opportunities and things like that. And we might try and, bring it to their attention, but they just want the pure compliance aspect out of it. And that's okay if that's what they want. They're the paying customer. But for others, we really try and be as proactive as possible, planning ideas, opportunities, just check-ins during the year. Hey, how you doing? What's going on? That kind of thing. Let them know that we want to be a business partner, or for an individual client, just an advisor in whatever capacity we can, just to make the financial aspects of their lives, easier, cleaner, more organized, whatever they want it to be.
Right. So the firm was founded quite a ways back, right? I think in the mid 80s, if I'm not mistaken.
It's over 30, it's about 35 to 40 years old.
Okay. And Michael, how long have you been with the firm?
I'm at 14 years.
14 years. And now as CEO, you've seen, the ups, the downs, the up cycles in revenue, the expansions, the contractions in revenue. So what I really like to ask my guests is, tell me about a time when things were kind of flattening out, right? Things were either, no matter how drastic it may have been, contracting, revenues were declining. How did you and the leadership team kind of manage the business through such a period, right? Not only from an operational perspective, but from the human side as well.
Fortunately, we've been in a position where we haven't had a huge downturn where it's led to any reductions in force. So from that standpoint, we've been able to, keep that away, from the employees. We have certain partners that, like any public accounting firm, you have some partners that are more, rainmakers, and some are really more, technicians. So those rainmakers are constantly out there working, churning, working their networks, working their contacts, and bringing in business. So, clients come and go. You lose a big client, and hopefully it's not by anything you did, but sometimes just lose a big client because they were sold, and they were sold to a company that has their own accounting firm, that they use. Sometimes it's just a matter of, relocation. Even though we're worldwide, we can treat people worldwide. Sometimes you have big business relocate, and they're a little more traditional, and they want that accountant who's, 5 miles down the road. So some things you lose and you can't have it, but you just hope your growth, both organic and through, acquisitions, you really, our focus is obviously making sure that aspect, far exceeds the attrition of the clients. Mm-hmm. So we're constantly looking at, what's in the pipeline. We use that phrase pipeline a lot. What's coming? What do we think?
Absolutely.
What are some potential opportunities out there? And, we're weighing that against, what we've lost or what we project to lose. And, knock on whatever I'm knocking on, for the most part, it's always been favorable. I mean, I can't remember the last time we had a decrease in revenue, from one year to the next. Maybe not every year is as high as you would want, and maybe it doesn't necessarily meet a budgeted projection, but we have not decreased. So that's just credit to our partner group, for bringing in that work. The good thing about accounting, for the most part, is a lot of the work you do is annuity-driven. So unlike a law firm, is they'll serve a client and hopefully they do a great job, and that client doesn't need them again. they did a trial. Hopefully that client doesn't need another trial, or an estate plan that might just need a little tinkering, but not the full plan. For tax returns and audits, that same client, if you're doing a good job, is coming back every year. So right off the bat, you don't need to necessarily generate that business. You know it's coming back because you're providing quality work to them. Mm-hmm. So right off the bat, it's a lot of your revenue that you don't need to worry about finding to replace it. It comes every year. And then by doing a good job with these clients, a lot of our referrals come from existing clients. So it's not even, we talk about, rainmaking, going out there, meeting with attorneys, bankers, financial advisors, whatever else. A lot of the work we get is just simply phone calls. Hey, I live down the street from Charlie, or, I'm a business owner. I'm in the same office building as this company. We need an audit. Sure. So a lot of it, luckily just comes from word of mouth about quality work we're doing. And the work just comes via a phone call or an email.
Right. That's fantastic. And really, really good to hear that, in the lifespan of the firm, and, you've seen a couple really big financial impacts to the economy, right? COVID is the obvious one, but also dating back to the financial crisis of 2007, 2008, 2009. Yep. But getting through those two periods kind of unscathed is surely a testament to your method and your model of
now when you talk about COVID, the big challenge we had there was operationally. As every business did. I'm not going to tell you anything else had. We had the ability to work at home, but most people didn't work at home. You work at home if it was a snowstorm, and we have to tell people, make sure you have whatever you need. But we transitioned to a remote practice over the course of 2 days. COVID was inching up on you, but no one really knew. And for us, at least for me, the first aha moment was I'm sitting here working and I'm listening to sports radio. And they announced that the Big East tournament was getting canceled. We're on the East Coast, Madison Square Garden. Sure. And once I heard that they were canceling a tournament, that tournament, the week before the NCAA tournament, I'm like, all right, this is getting real. So we kind of immediately just kind of gathered and like, all right, we need to make this available. And that was 2 or 3 days before a big March 15th deadline. And we came in on that 15th or the 16th, whatever it fell that year. And at that point on, starting that Tuesday, we were all remote. So, kudos to our IT department who made that happen. We had the technology in place, but the infrastructure wasn't there for, at that point, maybe 120, 130 people to suddenly work at home right away. Right. But our team did a great job. And, we were basically, at a real busy time of the year. We didn't really have any lost productivity. There were some adjustments, obviously. We had to work on schedules of people coming to the office to get things scanned, or clients were mailing stuff to pick up stuff. And we couldn't have more than 2 people in the office at a time because of all the COVID, so we had to come up with schedules for that. And I remember coming in, waiting outside till one person left,
oh my gosh,
that kind of thing. We wanted to protect our people. So, with that, even luckily, that was a growth year for us. So really speaks the testament of the people here. Right.
So then, Michael, tell us about a time when, of the opposite of those times, right? When sales were rapidly expanding and the new deals were like falling out of the trees.
Yeah.
As you and I both know, sometimes the challenges of dealing with rapid growth are much different, much bigger, and I'll say less forecasted than periods of a period of contraction. So tell us how you managed the business through a period of
that could be really challenging. And what I always tell people, oh God, it's another tax season, things like that. I always say, and people probably hate hearing it by now, every tax season kind of has its own personality. It takes on something. It could be COVID. It could be the brokerage houses release statements late and it pushes us back. It could be a couple of years ago, one brokerage house released statements and they realized they were all wrong, and we did all these returns and had to redo them. We had one a couple of years ago where, knock on wood, we landed, a very high level client with several hundred tax returns about 4 days before a deadline. And we obviously could get the returns done. We had to get them in our system, get extensions done, do calculations. And it really does change the model. I mean, we obviously do what we do to get it done, but you also, we really focus on the human side of our employees. And, we don't want to do the 90-hour work weeks, consistently if it happens once in a while. So that's the juggling act that we faced in the past is, you bring in that work to make sure you're properly and adequately staffed. Now, if I bring in a client now that I know is for next year, I have the opportunity to look at that, budgeted hours, and I can say, okay, are we staffed properly? But you don't have that luxury every time of a nice client coming in and giving you a 6-month heads up. In that situation, we had a client come in and basically say, all right, I need you to start tomorrow, kind of thing. And you're not going to turn down that kind of revenue, but you do have to find a way to work that. A, you're not putting an undue burden on your staff, number one. Number two, you're not taking away any of the attention that your other clients deserve. And that's the balancing act. It's easy to say, okay, I need to pull you, and you to get this done. But if I'm pulling you, that means I'm taking you away from another client.
That's very
And what
true.
makes this client more important? So we're constantly looking at that, so great problem to have, but it's a challenging problem.
So Michael, having said that, have you ever had a time when you've had to turn down business because you couldn't rally the right resources?
We try not to turn it down. We try and postpone, for lack of a better word. Right. Like we'll say, listen, you're coming to us 3 days before a deadline. I can't do any calculation for you. File an extension. I'm happy to take a look at it in a couple of weeks. And if it's an understanding person, they realize, okay, I just came to you at a really, really, really bad time. I understand why you can't do it. And
they know the deadlines too.
Not being able to do it, it's probably a client I don't want. I mean, if they're not going to say, okay, I came to you on April 13th. What do you mean you're not going to spend 80 hours the next 2 days to get this done? I don't want that client anyway. So, listen, I think part of what happens now is, I think a lot of firms now are reviewing their client list and not just getting fired by clients. You're firing clients for a variety of reasons. And this is, to your point, sometimes a client, you don't take a client for whatever reason, whether it's timing, just getting that gut feeling that it's not something you want to bring on, a risk analysis. He says there's, something here that just doesn't feel right, and that kind of thing. So yeah, there are times we turn down work for a whole variety of reasons.
You bring up a very good point that when you said some companies are very strategically looking at their client list and offboarding or essentially firing the clients that no longer suit their needs. Michael, I would argue that it's the smart businesses that are doing that.
Yes, correct.
And if you,
and it's hard.
Yeah, of course. There's emotional connections to every client, right?
It's the intangible stuff like the emotional connection. It's also the business one where, let's face it, we all look at reports every year. And as we said before, what was the first thing you said to me? What happens, when your revenue's down? So now I'm saying, well, it's a smart thing to get rid of a $40,000 client. Well, it's counterintuitive to your point. What happens when revenue's down? Here, I'm forcing revenue to be down. I'm making the decision. Right. So I got to figure why I'm making that decision. Am I getting rid of a $40,000 client because it's costing me $100,000 in labor? All right. Super smart decision, but revenue's down, not net revenue, but gross revenue's down. Am I getting rid of it because there's a transaction we don't feel comfortable with and we don't want to put our name on it? Those are the easy decisions. I mean, you don't want to lose a client, but you're also not going to jeopardize your integrity or your license or set yourself up for any kind of malpractice. So those situations are a little easier. If we feel like we can't take a position, we're not going to take a position. No dollar amount of a client engagement is worth that.
Right. So, Michael, earlier in the conversation, you mentioned that you do a lot of work in the entertainment industry, but you really are kind of industry agnostic when it comes to what your clients do for a living, right? You will service any client in any industry. Have you ever thought about, whether you should be more focused or is it better to go out as a broad?
Yeah, we never wanted to be a boutique firm, that we were focusing on one or two things. It works for some people, but as we're looking to grow, to kind of limit yourself to that was not something you wanted to do. Now, the reason I specifically mentioned entertainment before is business management, which is one of our wings. That is designed for entertainment. And I can elaborate on that later if you want, but that work and that type of those relationships are generally for people in the entertainment industry. But to your point, we really work on every industry: real estate, construction, professional services, the full gamut. I mean, and that's kind of what I said before, the traditional accounting firm. So we'll do the traditional type of work for everyone, hopefully just in a different way.
Right. And it makes sense, right? Accounting challenges are truly industry agnostic.
Yeah. I mean, listen, at the end of the day, a debit and a credit for every journal entry, whether it's a law firm we're working on, whether it's a manufacturer of widgets, whether it's an architect or whether it's real estate, your debit's got to equal your credits, your assets less your liabilities equal your equity. So at the end of the day, the concepts are the same, but knowledge for an industry are really, really important for the advisory side.
I do agree with that. So let me talk then about a different subject here. Recently, your firm went through a an ownership change, right?
Yes.
So
Yes.
dig into that a little bit. I'm sure a lot of guests, the audience for this Think Small podcast,
Yeah.
some are thinking about that. What does it look like when I need to change ownership or get an inflow of new capital into the business? I can't keep going and running the business the way it is today. I need to prepare it for the future. So tell me about this recent collaboration with Crete Professionals Alliance.
Yeah, no, so it's funny you mentioned that because the first announcement I have to make, which is really right off the press, is as of last week, Crete Professional Alliance did a rebrand, and they've renamed themselves. So I'm probably going to get it wrong a couple of times because I'm still getting used to it, but they have renamed themselves Current from a two-prong Current. And that is, ride the current, in the industry.
Sure.
You can look at it as the noun current or you can the adjective current, but the rebranding is current. So I will say Crete because I'm so used to it. We were actually at the Crete Partner Conference last week, and I can't tell you how many times someone said Crete. They said, no, I mean current. Even the Crete people that were there, or the current people, I'm sending emails now, and I'm putting in there, according to Crete/current, because people hear, so we're getting used to it. So if I say Crete or current, I'm talking the same thing. So
no problem.
So let's just start.
You're speaking my language. I've been through multiple brand transitions in my career, so I feel your pain.
Yeah. So exactly. So we joined this professional alliance. We just celebrated our 1-year anniversary. It was June of last year. Traditionally, it's what you call private equity. We like to call it, and they like to call it partner equity because it really is a true partnership we have with them. That we work together. We maintain complete day-to-day control of operations. They're not coming and telling us how to do anything. Sure, there's some reporting requirements to them because they do, obviously own, a piece of the business and so forth. But we haven't changed our day-to-day. One of the major changes we made is, though, that we named me as a COO. I ran our tax area. But as part of this, as we're looking to grow, we felt we needed someone to really focus on operations. And I was kind of indirectly doing that, at least on the tax side, and helping out elsewhere. So my role is refocused. I am away from client service. I'm just focusing on the operations and efficiencies of the firm. But it was designed for a few reasons. One, it was a way to get, that cash infusion, for the partners, obviously. But it was also designed to give us some support that we needed, back office support, administrative support, AR support, technology support. We're really, looking at AI innovations, a way we can make things, more efficient, and so forth like that. So it's been a great year. Obviously, transitions come with challenges, but with challenges kind of come opportunity. Like I said, we just spent a week with them in Nashville last week, really kind of talking to the leaders, just some information sessions, but also just some kind of, heart to hearts, how we want to do things, how their suggestions and so forth. And what I love is after every meeting, at the end of the day, we decide what we think is best for Adeptus. And I think that's really important because we've worked really hard to build a culture here that we're proud of. We built hard to put some great procedures and how to treat our clients a certain way. And they've done nothing to hinder us from continuing to do that.
So even though your new parent just went through a rebrand, they're still allowing you to go to market as Adeptus advisors, correct?
We agreed that, and all the firms and all the firms that are part of, this alliance, they are all maintaining their own separate identities. So yes, we are not only Adeptus Advisors Group now, we will be Adeptus Advisors Group next year. We will be Adeptus Advisors Group in 5 years.
Great.
Now, what's happening though is we are growing because other firms, smaller firms that aren't as set up structurally as us, are merging into us. So we will continue to grow, but Adeptus will maintain its identity, indefinitely.
Fantastic. Just in your earlier comments, you mentioned the magic word on this podcast, and that is AI. And currently in your role, you said you're kind of responsible for implementing and developing kind of the AI muscle within the firm, correct?
Mm-hmm. Yes, correct.
So I get a lot of conversation about AI in this podcast, obviously. So would love to hear your comments on how is the firm adapting to it, integrating it, and how are they looking at it as a tool for the future? Is it purely efficiency and speed? Or are you possibly looking at it as a way to, maintain headcount or even a headcount reduction tool?
Our focus right now is not at all on a headcount reduction. And I can't tell you what's going to happen 3 to 5 years from now, but as we've looked ahead the next couple of years, that's not at all in our model. It's an approach to kind of practice differently. we're trying to free up people to do more of the things that we all say we don't have time to do. And what I mean by that is go out, look for new business. What I mean by that is be able to provide more time to our clients, more phone calls, more check-ins where we don't even have a reason for calling. We're just calling to check in, see how you're doing. Because sometimes you call, oh, I was thinking of giving you a call. I have an idea. I was thinking about doing this, where they don't really want to waste our time because they're not really serious about it. But now since I'm on the phone, let me ask the question. So we want to free people up to do that. And obviously a lot of the AI innovations, do that. And we're looking at it across the board. We're looking at it from, importing data, doing some basic, bookkeeping functions that, basically, might take us 6 to 8 hours that can be done with AI in an hour,
Sure.
and again, freeing people up to master their skills, because now we can do more training and developing, getting people to do more of what they enjoy. Because let's face it, people don't necessarily love data input. And so if we can take some of that manual stuff away, now people are happier, enjoying their jobs. And if I can get people to work a little less during tax season, I think they'll be really happy with that as well. I don't say we don't work as hard. I'm hoping maybe we work a little less, and I'm hoping we work a little smarter. And I think that's the kind of the mantra we're taking, work smarter. And right. To me, that's what AI is going to afford us the ability to do.
Well, it was kind of a leading or maybe a trick question, Michael, and I apologize for that. But
did I fall for it?
But no, you fell right into the rest of my podcast guests, and that is exactly what you said, right? Not a single CEO or business leader that I speak to on this podcast is looking at AI as a headcount reduction tool. Not a one. They're all looking at it to improve the efficiency and productivity of their business. They're looking at it to upskill their employees. And they're honestly looking at I'll call it their younger employees, to teach the leadership about what AI can do and how to manage things. It's really it's invigorating, Michael, to hear even people very deeply involved in the the IT space. I spoke to a CEO whose business it was to implement AI into their client's business. And he said, I'm looking at AI to save me time so I can be more human with my clients and customers. And I just thought that was so almost inspiring, completely different than what we're all hearing in the national media and the news outlets is 6,000 layoffs at Meta and all this stuff. Well, I'm beginning to think that those are layoffs that shouldn't have been hired in the first place.
Yeah, well, I think it's a combination of that. People realized they had excess capacity they didn't need.
Yeah.
But, you could simplify AI to anything you want. I mean, technology. Think about technology 20 years ago.
Sure.
We doing the tax returns by hand versus now a software program. Manually writing down your time and then someone typing it in versus now I go on real time and it links to my software. So every year there's technological efficiencies. It just seems like recently this AI is kind of up the game dramatically. But, just this morning, on the way to work, I stopped to get a bagel. Well, when I got there, I typed in my order. They didn't need a person there to take my order. I typed in bagel and butter, and then I went up and paid. And when my bagel was ready, so I didn't need that order taker in theory. So was that a reduction in force at that bagel place? I don't know. It just might have been another person to help make the food, so I got through quicker. So maybe it was an efficiency thing, So
right.
Again, people could look at it and say, "Oh, great, no, a human's not taking my order, so they didn't need to hire that person." I don't look at it that way, and I can't comment. But to me, I got now 2 people making the bagels as opposed to 1 taking the order and 1 making the bagels.
That's right. And I bet that bagel shop was pretty busy.
Yeah, right. And that's why they had the need for it. And they wanted more people. They wanted to get people in and out quicker. Isn't that what you want with a transaction like that? Certain things you don't want to be rushed. But if I'm picking up a bagel to go, that's one of those things. I want to be rushed.
Well,
I don't want to.
That's true.
That's a transaction I want to get in and out. Some you want to feel like you're not being rushed. And I appreciate that. That's the kind of transition you want to feel like not rushed, but you want to feel like they are working as efficiently as they can to get you out of there as quick as possible, because that's what you want. You want to get out of there as quick as possible and get about your day.
Right. So, Michael, you're obviously focused on implementing AI internally, right? Getting it as a tool for business efficiency and productivity. Has the firm, though, started using AI with its clients, and what are their reactions and what are their requests and asks for how you as a service provider are implementing AI in their business?
That kind of goes to one of our service areas, which is CAS, as I mentioned earlier. And that's basically, you can call that a bunch of different things. You can call it outsourced CFO. You can call it, bookkeeping on steroids. I kind of heard it called all these bunch of things. But basically what we're doing is we're trying to improve the efficiencies of these businesses who might not want to pay for a full CFO and want us to do it. But now we're also bringing some of the technologies that we use to them. And we're saying, hey, what makes sense for you? And it's good and bad. When you're an advisor, it's an interesting concept. You want to do the best job you can. And you want to advise the client and you want to teach your client. But the better you teach them and the better you advise them, potentially it's the sooner they don't need you for something. And you can't look at it that way, but it's the truth. So you want to basically do that best job because they're your next referral or they come back to you for something else. But, right. We talk to them about, hey, you could do your bank recs, real easy. You could build a spreadsheet. You don't need 2 AP clerks. You can have one of your AP clerks help with AR collections. Because one of your AP clerks now do their job twice as fast. And again, when we talk to people, it's always about how can you utilize your workforce better, not how can you reduce your workforce. And I don't want to be, one of those, on a high horse saying, no, there's going to be no reductions in force anywhere because of AI. I don't think that's a fair statement. In our area, we're focusing on reallocating the resources because if I want to get rid of someone, it's going to be rid of their performance and they wouldn't be here anyway. It's right. Not going to be because we're bringing in new technology. So everyone who's here, we want to have here. So we are going to find a role that's going to make them happy, make them challenged, and it's going to work for us.
I remember, a little bit earlier in my career, and I know you'll remember this too, Michael, when Excel and even Lotus 1-2-3 started coming out, there were a lot of comments about, oh my gosh, this spreadsheet software is going to eliminate the accounting field.
Yeah.
Guess what? We're still using some type of a spreadsheet tool. It may look a little different than when we started, but you are a case in point.
In Excel. I need to, for certain jobs, I need to find someone who is experts in pivot tables. And so it's not even like, I need people to train on that software that was going to replace people. I now want people to be experts so we can even use all the capabilities. And I guarantee it, me who's used Excel for 20 years, you obviously used it. You don't know 10% of the functionality of it. And I don't know 10% of the functionality of it,
Right. So anyway, I take all the comments that we hear today as a little bit of fear mongering. I take it with a grain of salt. But I'm thrilled of what you said about utilizing AI in your business and keeping it as a tool for enhancement, productivity and efficiency and upskilling your employees. I love that. And the audience on our podcast community is saying the exact same thing. So I'm very bullish on the AI future.
Yeah.
So let's talk.
You got to get into it. You don't have a choice. Meaning, if I came up here and says, no, I don't want to do it, I'm going to fall behind other firms. So, anyone who doesn't want to do it, my recommendation would be embrace it because at some point in time, you're not going to have a choice or it's going to be too late.
Right. Well, enough said on that subject.
Yeah.
So, Michael, it's an exciting time, right, for Adventus Advisors. Talk to me about the future. What does the next 3 to 5 years look like for the business?
I would expect a pretty significant growth. Like I said, as part of Current, us being one of their, we call 10-pole firms, we are in talks, to obviously merge in some other firms. So, we've had 3 firms merge in so far in 2026. One as recently as last week. I do anticipate potentially, I'm going to guess a few more this year. And I would think over the next few years, definitely some every year. So I would expect that growth to continue, plus our normal organic growth, and so forth. So one of our challenges is to make sure that we are structurally able to support that. Our IT team, when I first got here, we had no one. We had an outside guy. We hired someone who's been here 13 years now, our senior director of IT. He now has a staff of 4 underneath him. And I would expect that to become 5, 6, 7 over the next year. We now have a director of admin who oversees all our admin. In the past, we didn't have that role. That was just each partner kind of dealt with admin in their office. We have a director of HR who's now having a second person, work under her direction just to handle, HR issues and this and that and this and that, and so forth. So as we continue to grow, we need to make sure that infrastructure is in place.
Interesting. So what could possibly be holding you back from achieving those growth goals?
Hopefully nothing. We have a plan in place, we look at these other firms. We have to make sure that they make sense for us on a variety of reasons. Obviously, from the financial side, their staff, their client base, things like that. But again, what's super important to us is the culture. We need to make sure they're going to fit into how we do things. Just personalities. I always say, you spend so much time with the people you work with.
Yeah.
I got to like you. So take away all the numbers for a second. I got to be like, I got to come to work today. I got to see Rob. I hate working with Rob, so I'm dreading. I'm just work home today so I can avoid Rob. No, so we really try, and when we interview people, we try and just have conversations with them. It's not even just about interviews. It's just conversations. Wow, I like this person. I could see myself working with them in a conference room for 4 hours. Now, like, oh God, I have to get out of here. So, do these people have the right temperament? If it's the partners, do I see when we're in their office, how are they talking to their staff people? Is it a camaraderie? Is it a friendliness? If I'm getting that, bossing you in your face kind of thing, that's probably not a firm that we want to take a conversation with much further, because that's not how we do things. Mm-hmm. So that stops us, as we're not going to grow just to grow. We're going to grow in a way that makes sense for us and doesn't change what we've worked really hard to build here.
I love that you finished this discussion with an emphasis on culture, Michael. Yeah. We're talking about productivity and AI tools but ending it with culture as a key component of how your firm is going to grow is super important and vital and great advice for all of our listeners to hear. Well, Michael, this has been a great conversation. I certainly appreciate your time. Michael Hoffman, the Chief Operating Officer with Adeptus Advisors Group, based in New York and New Jersey. Thank you so much for your time today on the Think Small podcast.
Hey, Rob, I enjoyed it. Thanks so much.
Welcome to the Think Small podcast, hypergrowth for small businesses. So, what's slowing you down?